Today we are going to talk about a fantastic setup that we were following today in the New York trading room. Here we have traders, the S&P. This is the 30-minute chart, and as we can see, price has been going up during the start of the session, and let's call this candle as Charlie, as the Charlie candle. The Charlie candle was able to make a hard high, higher than the previous candle, as you can see here, and it was able to make a hard high above this area. The Charlie candle comes with big volume, and here is where we can start wondering what is going on, because if we have a strong volume and we have the price building this high, but the price rejects after reaching the high, what do you think is going on in terms of the liquidity? Well, clearly that the big guy is placing a lot of liquidity at that high. And that's a hint. That's a hint that this is not normal. What should be normal with this volume is a candle closing above the area and near its highs. But we are not seeing that. We are seeing a rejection on this Charlie candle. Also, traders, as you can see, this is our indicator. This indicator shows the liquidity in real time, and we can see that the liquidity is dropping, which tells that the price is wrong, let's say, which tells that we have an opportunity to have the price selling, and that combined with the volume, and look at the momentum, we're losing the momentum in the MACD and the histogram as well, that tells that we should get ready for selling the S&P. So today in the live trading room, we have a trading room every morning, New York time, where we talk about the setups in the live markets. We came down to the 5-minute chart, and we started to find the completion of that leg. Oh, something else, here on the 30-minute chart, as we can see, there is already the 5-wave sequence as an ending diagonal wave. The context is important as well, right? We have 1, we have 2, we have 3, we have 4, we have 5, and here we were looking for some sort of retrace. So then, traders, on the 5-minute chart, we go candle by candle, understanding liquidity. We are not forecasting what is going to happen next. We are reading the actual liquidity. So here the price moves above the high, as we can see. But look at the reaction after the follow-through after the breakout. So we have a nice bullish candle closing near the highs, but immediately we have a candle closing near the lows of the previous candle. If this is Charlie and this is Alpha, we have Charlie and we have Alpha. Alpha is saying that this is bearish. And look, the position of the indicator here is falling sharply. Okay, so this is not enough. We usually wait for a candle that closes below the low of any candle. So let's see, this one here is the one that closes for the very first time, as you can see. So when we have this signal, traders, as you can see, our strategy is pretty clear. We sell there and we leave the protective stop loss just here, one tick above the high. We're always looking for these type of trades where the stop loss is not huge, let's say, where the stop loss is quite near to the entry point. And we start measuring these with these boxes. Here, traders, we have, this is the entry point and this is the risk, right? This is the risk. And once we get to the 1-to-1 risk-reward ratio, we always book some profits. So then the price starts to develop. We have a retrace, probably we have an opportunity to sell at higher prices in case that we didn't sell here. We have a discount, and the price can't make it to the highs. We continue seeing the price not being able to continue. Look at the indicator. Look how the indicator is selling off sharply. is having a big distance between the price and the indicator. So this is also telling that we have a fantastic opportunity, a fantastic setup. I always tell my clients, hey, be patient, wait for the setup. So we are fine, right? And we have the stop loss just above the high, so we are fine. And then traders, we start seeing some nice candles breaking down. Here is enough to book some profits, right? So here we have the price selling to the 1-to-1 risk-reward ratio. Remember that each of these boxes are showing the risk, one risk and one reward. And right there, we can book some profits. Okay, we are going good. Volume is increasing, which is good for the setup. The effort and the result looks pretty good. And the next candle, traders, is fantastic because look at this beauty. So we got so far 1, 2, 3, 4 risk reward ratio. Okay, that's good. We continue here. Okay, so as you can see, the candle that comes here, let's call it the any name, the Tango candle. The Tango candle is an alert that something is going on. This is not good for your short trade because volume is increasing, but the size of the candle is decreasing compared to the previous candle. We have a whole course inside the Elliott Wave Street membership, the WICOF course, where we go through all these abnormal and normal price action if you want to learn more about volume. So then, traders, this could be enough for booking profits or at least reducing the size of the position. This is a day trade. And the next candle confirms that we should book some profits. Look, the distance between the price and the indicator, now we don't have any distance and the price is like at the fair price. So there we need to book some profits. The price then continues slightly lower. So at least for me, this is more than enough. Right there we have 1, 2, 3, 4, 5, and 6 risk reward ratio roughly. Probably a little bit less if we book the profits here. But for me, that's enough, right? That's enough. And the price continues slightly lower during the session. But now we're seeing some troubles, right? We're seeing now these candles that are telling, hey, be careful, look at the indicator, how is it starting to climb. It's more like, hey, book your profits. You know, if you didn't book your profits before, this is it, do it. And this trade had the potential of 1, 2, 3, 4, 5, 6, 7, 8, and 9 risk reward ratio. This is the type of exercise that we are doing daily in the trading rooms, showing the liquidity, talking about the volume, talking about the momentum of the market, and of course, the Elliott wave cycle that we are following. If you want to join us to experience the Elliott Wave Street membership, on elliottwavestreet.com, here the membership tab, you will find our plans. We are having a special of 50% of discount at the first month as a trial. You can try any of the plans with 50% of discount. And here we have also a special AVA trade offer for clients outside the US. You can get access to the membership, free access by following these steps. All right, traders. So that was the exercise that I wanted to share with you today. I think it's a beautiful example of how powerful the indicator, the volume, the price reading candle by candle can be. And of course, we can apply this on any time frame. This is just a day trade, but you can apply it on any time frame. So join us, join the trading room, and I'll see you soon. Take care. Bye-bye.